Hey there, financial freedom seekers. Iggy here from Investing Iguana, and boy, do I have a treat for you today. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with a total of 460,000 reads. In this video, we're diving deep into the Q1 2024 results of Mapletree Pan-Asia Commercial Trust. Trust me, you don't want to miss this one. I'll be breaking down the numbers, explaining the key highlights, and giving you the inside scoop on what it all means for you as a potential investor. So, grab a snack, sit back, and let's unravel the mysteries of Mapletree together. Slide 1. The infographic, titled Navigating Market Changes with Greater Resilience and Agility, highlights the key themes shaping the business environment. These include geopolitical conflicts and economic uncertainties, the new era of high interest rates, and volatile financial markets with currency fluctuations. To position their portfolio, MPACT, for future maneuvers, Mapletree outlines 2 strategic priorities. First, strengthening their capital structure and refining their portfolio mix. This involves actively pursuing opportunities to recalibrate their capital structure, employing dynamic portfolio management strategies aligned with market conditions, and undertaking initiatives to safeguard and enhance unitholder value. The second priority is continued proactive asset management efforts. Mapletree's operational backbone has remained resilient, with their China assets outperforming the market. They aim to prioritize healthy occupancy levels, stable rental income, and adapt swiftly to stay ahead of market changes. Interestingly, the infographic reveals that Singapore remains a major component of Mapletree's portfolio, central to their long-term objectives. It provides a breakdown of their portfolio composition by market, with Singapore contributing 55% to their assets under management, AUM, and 60% to their net property income, NPI. Slide 2. Let's start with the 4Q FY 23/24 distribution per unit, or DPU for short. This figure stands at a solid 2.29 Singapore cents, marking a 1.8% year-on-year increase. Not too shabby, right? This steady growth in distributions is music to the ears of income-seeking investors. Now, let's talk about the net asset value per unit, or NAV. This metric reflects the underlying value of the company's assets, and it currently sits at 1 Singapore dollar and 75 cents. Interestingly, this figure has been dampened by the stronger Singapore dollar against foreign currencies. This could indicate that the company has significant international exposure, presenting both opportunities and risks to consider. Moving on, the aggregate leverage of 40.5% demonstrates the company's financial flexibility and liquidity. This level of leverage appears to be within a reasonable range, providing the company with the capacity to optimize its capital structure and pursue strategic growth initiatives. But wait, there's more. The portfolio committed occupancy of 96.1% is an impressive figure that reflects the company's ability to maintain high occupancy levels across its portfolio of commercial properties. This impressive occupancy rate is likely the result of proactive management efforts, which have improved occupancy from the previous year. With a balanced lease expiry profile, the portfolio weighted average lease expiry of 2.4 years further adds to the company's appeal. This metric suggests a well-managed lease portfolio, reducing the risk of sudden vacancies and ensuring a steady stream of rental income. Slide 3. From the slide, we can see that Mapletree has reported some impressive numbers in their latest quarterly results. Despite facing forex headwinds, the company managed to improve its financial performance with increases in gross revenue, net property income, NPI, and distribution per unit, DPU. This growth was driven by their strong performance in Singapore as well as stable contributions from their Festival Walk property. One key highlight is Mapletree's consistent operational performance, with a year-over-year improvement in portfolio committed occupancy and positive full-year rental reversion. Their portfolio valuation also remained stable, buoyed by Singapore's economic uplift. It's worth noting that Singapore contributes a significant 55% of Mapletree's assets under management, AUM, and 60% of their NPI, reinforcing the company's long-term stability in the region. Their Vivo City property deserves a special mention, achieving full committed occupancy alongside strong rental reversion. The Festival Walk property also demonstrated resilience with high committed occupancy and ongoing progress towards rental stabilization. From a capital management perspective, Mapletree has taken proactive steps by issuing 200 million Singapore dollars in 10-year fixed-rate senior green notes to boost their long-term stability. They've also optimized their currency swapping opportunities to enhance risk and interest rate benefits. Slide 4. This slide compares Mapletree's performance in the fourth quarter of fiscal year 2023/2024 against the previous year. A few key points jump out. First, Mapletree saw higher gross revenue driven by better performance from their Singapore properties and stable contribution from Festival Walk. However, overseas contributions took a hit due to a stronger Singapore dollar against the Japanese yen and Chinese renminbi. Second, property operating expenses rose marginally due to higher staff costs and property management fees. But this increase was partially offset by lower utility expenses. Third, portfolio net property income grew a solid 3.2% year-on-year, indicating Mapletree's core business remains on a consistent growth trajectory. Finally, while net finance costs increased 10.8% due to higher interest rates, the amount available for distribution to unitholders still rose 2.5%. This allowed Mapletree to increase their distribution per unit by 1.8%. Overall, this report paints a positive picture of Mapletree demonstrated resilient performance despite headwinds like rising finance costs and currency fluctuations. With consistent growth in their core Singapore portfolio, Mapletree seems well-positioned to continue delivering returns to investors. Slide 5. First off, let's talk about the impressive 16% increase in gross revenue. This growth was fueled by the full-year contribution from their merger assets and a stronger Singapore dollar against foreign currencies. Sounds like their core business is firing on all cylinders. However, the party doesn't stop there. Property operating expenses also saw a significant 18.5% jump, primarily due to the costs associated with those merger assets, higher utility costs, and increased contracted rates. It's like they're paying the price for success, but hey, that's the name of the game. Now, here's where it gets interesting. Despite the increased costs, Mapletree managed to boost their net property income by a solid 15.2% year-over-year. That's some serious financial wizardry right there, folks. But wait, there's more. The net finance costs shot up by a whopping 39%, likely due to higher interest expenses from the merger-related debt and those pesky elevated borrowing rates. It's a double-edged sword, but one that Mapletree seems to be handling with finesse. All in all, the amount available for distribution to unitholders grew by a respectable 5.2%. Not too shabby, right? It's like they're juggling all these financial balls and still managing to keep them in the air. Of course, there were some headwinds, like the full-year impact of higher utility costs, higher interest rates, and that pesky forex impact from the stronger Sing dollar. But hey, what's a little challenge for a financial powerhouse like Mapletree? Slide 6. The key highlight is Singapore's robust performance, driven by a merger and the country's strong operational results. This has led to a significant NPI uplift of 18.7 million Singapore dollars, even after covering higher utility expenses. This positive trend signals Mapletree's ability to generate consistent and growing income streams, which is great news for investors. When we look at the contribution to gross revenue, we see a well-diversified portfolio. The majority comes from the MBC.SG market at 59%, followed by VivoCity.SG at 21% and other SG properties at 9%. This diversification across different asset types and markets suggests a balanced portfolio that can withstand market fluctuations. Turning to the contribution to NPI, the MBC.SG assets account for a substantial 60%, with VivoCity.SG contributing 21% and the China properties making up 10%. Notably, nearly half of the NPI is derived from the core assets, indicating Mapletree's focus on high-performing, income-generating properties. Overall, this slide paints a promising picture for Mapletree. The company's strong performance in Singapore, coupled with a diversified portfolio and a focus on core assets, positions it well for continued growth and income generation. As always, it's essential to conduct thorough research and consult with financial advisors before making any investment decisions. Slide 7. The key highlight here is the significant value of their investment properties, standing at a staggering $16.2 billion as of March 2024. That's a massive portfolio of assets, folks. Additionally, they've got a solid investment in a joint venture worth over $118 million, showing their diversification game is strong. Now, let's talk numbers. Despite the stronger Singapore dollar putting a dent in the value of their properties against other currencies, the company still managed to increase its net assets to an impressive $9.4 billion. That's some serious financial muscle right there. But wait, there's more. The report also gives us insights into the company's ownership structure. The majority of the net assets are held by unit holders, with a smaller portion belonging to perpetual securities holders and non-controlling interests. This diversified ownership base adds stability and resilience to the company's financial foundation. Overall, this stable balance sheet paints a picture of a company that's been playing its cards right. With a robust investment portfolio, solid joint venture involvement, and a healthy net asset position, they seem well positioned to weather economic storms and capitalize on growth opportunities. Of course, as always, it's crucial to do your own research and consult with financial advisors before making any investment decisions. But from where I'm standing, this company looks like a potential winner in the investment game. Claude. Alright, financial freedom fighters, that's a wrap on our deep dive into Mapletree Pan-Asia Commercial Trust's Q1 2024 results. We've seen some impressive numbers, a diversified portfolio, and a solid balance sheet that would make any investor's heart skip a beat. But remember, investing is a personal journey, and what works for one might not work for another. Always do your own research, consult with financial advisors, and make decisions that align with your goals and risk tolerance. If you found this video helpful, don't forget to smash that like button and subscribe to the Investing Iguana channel for more financial wisdom and a few laughs along the way. Until next time, keep chasing those financial dreams, and remember, with the right knowledge and a bit of iguana intuition, anything is possible.